Mr. Napier, so where does a commodity consumer like India fit in? Because in a commodity boom and a bust, sir, you've always mentioned that there's nothing like a bust. It's all about wealth which moves from a producer to a consumer in a commodity downturn, and the vice versa happens in a commodity boom.
Yeah, so there are different ways of looking at inflation, and I tend to believe that inflation is everywhere and at all times a monetary phenomenon. So I want to look at commodity prices in that context. The history of the 1970s is when we had high inflation is that these rises in prices of commodities were accommodated by the central bank and accommodated through higher money supply growth. And that was a political choice, and it may well even have been the correct political choice, because the consequence of not doing it was really a pretty steep decline in real economic activity. And they decided not to do that and to accommodate it. So I now look at India, and I look at the Reserve Bank of India, and it really stands out over the last 2 to 3 years. I mean, it stands out like a shining beacon of maybe what a central banker should be doing. Because if I look at the growth in broad money in India, it did have a little spike during COVID, but effectively it's been stable. And it's come back down to where it was before. In other words, in the developed world, first from COVID, and now I expect also because of the war, central bankers have bent over and accommodated. And India's central bank so far seems to be standing up against that. Now, you will know that, and I've just said that that creates issues for the real economy. But it's still, in my opinion, if you're an investor, it's a positive thing to do. India will have to solve the problem of commodity prices, perhaps fiscally. And that's particularly true for the poor population of India who desperately need this. Now, that's not ideal, but it is essential that food and energy flows to people who need it. I mean, need it to survive. And so there'll be a fiscal answer to that. So I think the crucial thing for India is, what does the Reserve Bank of India do? If it continues with the existing policy, then I think maybe it does mean slower economic growth for India. But, and it's a very important but, the monetary policy of India will really shine out as being very different from the developed world. And it brings us back to this issue that really is the cause of the change of the structure. Does India need to inflate away its debts? No. Very simply, no, no, and no. It has a level of debt to GDP which is perfectly manageable for an economy like India. It doesn't need to take these extreme actions of the developed world. And if it takes that choice, and just because you have a choice doesn't mean to say you take it. There are lots of politicians in the world who make the wrong choice, even though they have lots of choices. I'm arguing that the developed world really doesn't have very many choices anymore. It's kind of path dependent on its policy. But if India can avoid making those mistakes of aping the mistakes of the developed world in terms of financial repression, it will still have to cope with inflation, imported inflation. But the RBI policy should ensure that we don't generate huge levels of domestic inflation. And there is a positive from all of this for India. There is one positive from financial repression in the developed world for India, which would be significant capital inflows. The first rule of financial repression is get your money out of the country. And if that's going to be true for Japan, for the Eurozone, for the United Kingdom, and ultimately even for the United States, where's it going to go? And if the RBI can continue with a sound, stable monetary policy, and the government of India can avoid accelerating repression, there are some repressionary elements left from the license rise. They've tended to linger, but they're been slowly dwindling. But as long as they stay where they are and don't go back up again, then I think India will attract a large amount of capital. So there are positives and negatives in all of this for India, but if the government plays its cards right, I think ultimately the positives will be more important. And then we have to weather the storm on the energy price. And of course, it's a very volatile price and it can collapse just as easily as it can soar. And a lot of that will depend upon the decisions made in Saudi Arabia. And we forget that sometimes, but we may not have to live with high energy prices for much longer if a deal can be done with Saudi Arabia.